Hi, everybody. It's been a while since we did the podcast, and that's partly because I was getting tired of talking about the same problems. But, we're now in a different time with slightly different variations on some of those same problems. And a lot of those same problems that we're talking about here are related to a lot of the bad information that's out there. And that's sort of my standard thing to talk about at certain points, because the media generally doesn't understand and doesn't report properly on the way things are happening in the real estate market. And one of the big reasons for that is they look at it from a macro economic standpoint rather than a micro. And everything in real estate is micro market. If you're an institutional investor, that's a different world. But if you're a person who's looking at buying or selling a home, and feel free to call me, and I'm happy to talk to you about buying or selling your home if you're in Southern California. But if you're someone as an individual, you need to be looking at the micro market that you're interested in, whether that's because you're a seller and you're trying to decide if you're going to put your house on the market, or if you're a buyer and you're evaluating where you want to be, what city you're going to move to, or just if you're going to shift neighborhoods, or you just need to upsize or downsize or whatever. Those are all micro markets. And it's one of those things where you look at the way things are reported. This morning's headline, the mortgage rates had dropped from 6.75% to 6.74%. And the headline, rather than just saying slight move in interest rates, was interest rates drop again. Well, that's just a joke, because those kind of numbers don't make any difference until we see a significant drop in interest rates. Interest rates are not going to be the key factor. And one of the things that's being talked about forever, for this last year, is that the market will not move until interest rates drop. And there is some truth to that, but we've also been noticing that at a certain point, people have accepted it because transactions are still happening. And if there was more inventory, more transactions would happen, but we're still at a shortage despite the talk about how much more inventory there is, because the inventory expansion really is, compared in most of the articles to year over year. And so we're comparing it to last year. Well, you can't look at it just that way. You really need to start looking at those comparisons and say, where was it in 2019? Because we're way below where we were before the pandemic. The numbers are hugely different. We are, in different areas. It's, it floats, but around here we're 40% under or so where we were pre-pandemic. Well, if there's that many less units, it doesn't matter whether or not the rates are up, because there is still enough buyer pool out there to transact in that situation. But what I really want to talk about today is what to me is the current key, and it's what's being talked about as a segment of it, but really to me it's the base, and that is uncertainty. The market volatility right now is being driven by uncertainty, and the stagnation is being driven by uncertainty. We don't know in the current climate whether or not tariffs will affect construction. Well, they are affecting construction because there's uncertainty. And while that uncertainty exists, you won't see the investors and the large builders continue to build because they don't know how much the construction costs are going to be. Because if there are significant tariffs on the materials that they need, and if they can't get the labor that they need, you can't build at a number that you can lock in. If you can't lock your numbers on a 3 to 5 year build project, longer if you're doing a large development, you can't predict that future. And so all this uncertainty is what's driving everything. So the question then becomes, how do you take advantage of that uncertainty? How do you, as an individual person, not society, you, me, your friends, take advantage of the uncertainty in the market to be able to decide whether or not it's the right time for you to move? There is always going to be a certain number of properties that will transact and move. and people who need to move, people who need to sell. Obviously, I'm a trust and probate specialist. So I deal a lot with properties that are trading because someone has passed away, and the family issues that come with that. Well, those properties will generally trade. Sometimes they will stay within the family, but if there are multiple siblings that are inheriting, a lot of the time it's going to have to be sold for that. Those ones will transact. Those will always happen. People get divorced. That happens. People get job transfers. That'll change. Retirement comes around, and it becomes time to start looking at other markets possibly, or just downsizing in the market where you are. I have neighbors who are in their 80s who, are renting out their property, large property nearby in Glendale, and they're renting in one of the condos in our building because they just needed to downsize and be into a single-story home. Those kind of things happen all the time, and that one will eventually sell. But you will hear that over and over and over. What people need to get from 2 stories to 1 story. There's always reasons why people need to transact, and those are times when you start to look at what's going on and how that affects you as a seller or you as a buyer. So here's a few things that we can think about in terms of where those opportunities are within the market right now in the uncertainty of the market. Now, one thing is there is less competition because there are less people who are qualified to buy. And I'm sorry if you're one of the people who can't currently qualify. I have a client right now. We're trying to help him get qualified. And it's frustrating because they should be easy, but it's hard right now because of the way that the uncertainty of the economy is making it more difficult. But because there's less competition, that also means if you're a buyer, you can possibly find a property that you wouldn't have gotten of just a few years ago, especially at the height of the pandemic, but I kind of throw all that out. If there's a lot of competition, that's when you get into these gigantic bidding wars with multiple offers on properties. Here in California, that's pretty standard. You see that a lot if you're in the nicer areas. Now, for the last few years, we've seen less of that. Or the last year, we've seen that slow down. But it still happens. The difference is in the height of pandemic, we were seeing 20, 30, 40 offers on a home, and now we're seeing 2, 3, 5 in the more desirable properties. But it's not as crazy as it was. And without that frenzy that we had back in, say, 2021, it's easier to get in and it's easier to be the winning bidder because you're actually able to put the terms together possibly that will make it more appealing for you as a buyer. And sometimes you just get the house because sometimes there are deals that happen. I know one that just happened recently with someone I know who bought a property way under market because they just happened to stumble on a home that the seller needed to get out because they were already in contract on another house and they didn't want to lose that house. Those stories happen, and those opportunities come. So that's one. Mortgages. Mortgage rates aren't coming down in the short term. I'm just flat out saying it, and I'm not your financial advisor, so I am disclaiming that as a statement of fact. But in my little old business reporter in the 80s and a real estate agent today, looking at it, going, I don't see how mortgages can come down right now. They might in a year, they might in some miracle happens, but we don't. When we've historically looked at rate changes, there have been other times when the Fed rate has gone down on the funds rate, and at the same time the mortgage rates have gone up because the mortgage rates are tied more to the treasuries than they are to the Fed rate. So we can't predict one or the other, no matter what anyone's political thoughts are on whether or not we can get the Fed to drop rates. That's not really what's going to drive it. And whenever there's uncertainty in the market, the bond market's a place where money can go, and it makes it harder to drop rates. And I don't see rates dropping that quickly. I may be wrong, but I'm going to be surprised if I am, if the rates will drop really quickly because of the uncertainty in the market. Now, what does that mean? That means there's other things you need to look at for financing. We'll probably see adjustable rate mortgages come back to a certain extent. People are betting on, how long they can do it. We have an adjustable rate mortgage right now. My wife and I have a crazily low, under 2% adjustable rate mortgage. And we know we'll not be in the home that we're in for the 10 years that would be an issue. But they haven't been a practical choice for people for the last 2 years because the rates for an adjustable weren't enough, of a benefit beyond a 30-year mortgage that it didn't make sense for people to do them. But they now will probably have their place again. Don't be too surprised about that. There are some alternate things that people talk about a lot. Rate buy downs is a big deal lately, where you can, part of a transaction can, one side or the other is paying to buy down the other person's rate. Now, that's great if there's money there and you can do that and you can buy down the rate overall. The hot thing over the last few years, and I've never liked them, is where people go, there's what they call a 2-1 buy down. And I'm not giving you financial advice. Talk to your accountant. They can tell you whether or not this is a good one for you. But it's a gamble because people are using them to be able to qualify to get into the home by having the rate be significantly dropped for the first year and then dropped a little bit less, but still better the second year. And in the third year, it goes back to its normal rate. So they've got to bet, make that money up in the long term at a loan. But that's one of the reasons why you see, the two different numbers whenever rates are quoted. So say, for example, you bet 2 years ago and did that assumption that rates would drop, and you did that 2-1 buy down. Well, all of a sudden now you're paying 2 points higher than you were when you started your loan. Well, that's a pretty hefty difference. Since those rates didn't come down, the rates are actually higher than they were 2 years ago. So they're a little better than they were last year. Last year we were over 7. Now we're a little under 7. But if you're in that situation and you are now trying to balance your budget and you bet on that rate coming down, well, now you may be going, I'm going to be one of those people who's going to be selling my house now before I end up house poor and not have any cash left because all my money is now in the house because my payment is now $1,000 more than it was last year or more. So those are the things you have to watch out for with that. Equity. That's the big thing here. You are in a great position if you've got equity in a home right now. You can sell it. You can borrow against it. With inventory as historically low as it is, especially for move-in ready homes, well-presented listings in the areas you want to go, they're still selling. They sell quickly. That there is this myth that everything's sitting on the market for now. The average days on market is up. That's true. But it's still not up over where historic average days on market are in most areas. So if you're looking at the numbers, if you have a beautiful, perfect home in a great area that someone can move in and not have to do anything, especially if you're in a first-time buyer area or a move-up area where people may be stretching a little bit to get in, they don't have the money to be able to fix it up afterwards, well, those homes are going to go. They're going to sell, and they're going to sell quickly. So people don't have to stress when they get into the home. So if you've got equity in a home that's move-in ready, you can turn that over pretty darn easily. And if you want to either move out of state, or if you are downsizing or whatever, or just moving, you're in an ideal position because you'll have a pile of cash to be able to do stuff. If you bought anything more than 5 years ago, you're sitting on equity. Even if you stretch to buy it 5 years ago, assuming you haven't pulled more cash out in between, you're in a pretty good darn position. You have cash. And if you bought it 20 years ago, your biggest question in your mind is going, well, what's going to happen with capital gains? And I've said this before. Don't be completely afraid of capital gains because it means you're winning. You're going to pay some taxes, but you've made a ton of money in between. Sometimes, the taxes are the price to pay for success. So don't stress as much as people are stressing about it. But obviously that's an issue. But you're taking money out of profits. You're not taking money out of value per se. But of course, there's legislation at the time when we're talking about this now, just being introduced about the idea of eliminating capital gains completely on property. And for some people, that may be an issue, because if you're selling a multi-million-dollar property, $5, $8, $10 million, that's a big deal, because even a married couple can only take $500,000 of exemption off of it, but and then you can also write off any cost related to it and the improvements you've made to the home. You're still going to pay capital gains on the difference between what you bought it for and what you sell it for. But if that legislation happens to go through, that's kind of a big deal. But I wouldn't count on it, because you can never count currently on making assumptions of what will and will not work in in our modern political climate, because everything is so divisive. It doesn't matter what side you're on, it's just about divisive, that it's very difficult to make a strategic decision based on something that's going to be legislative. So look at your numbers, and if the numbers are real, with a nice $250,000 for a single person or $500,000 for a married couple, and it works for you, take the win. But if you do, even better, and that happens to work out for you, if you've got a bigger number, that's more of an issue. If you're in that $1 to $2, $3 million range, it isn't enough money that you shouldn't be taking that money and taking and moving on to whatever you want to do. Don't let being stuck in a property over a little bit of that tax burden. There's always going to be taxes, death taxes, always there. Don't let that stop you from enjoying your life and doing what you want to do. This is not financial advice. This is, just riffings about life. We only go around once. Don't let yourself get stuck because of the uncertainty of what's going on. But it is making it harder to make decisions because, as we said, uncertainty, our topic of the day, is it's hard to make decisions when all of a sudden this new legislation pops up that may have an opportunity for us to not be in that position anymore, having to pay capital gains. But if you're in a normal price range, don't necessarily count on it. It may work out. There are people who are motivated sellers who need to move, whether it's, as I said, probate, life changes, job changes, whatever. A lot of people will say, "Oh, things that have been sitting on the market 30 days." 30 days is nothing in the modern world. 30 days is only, a big deal for people who only started paying attention to real estate during the pandemic, where everything was turning over in 2 or 3 days and it was silly. In the long run, 2 months, I wouldn't even stress before that. Once something gets to 90 or so, there might be a deal. Unless somebody's in that position where they had to move. But don't get completely freaked out about the idea of, I'm going to get a deal because, it's been on the market for 45 days. Not if their agent has explained it to them properly and made the sellers aware that deals sometimes take a while, especially if you're trying to get a certain price. You can sell anything if you drop the price enough. That's a different story. If you were trying to get market value, sometimes market value takes time, and you don't necessarily want to rush if you're trying to get a certain price. Now, at some point, those numbers will make sense. There's more to it than just price, because you can see certain things related to prices by the number of showings you get. If no one is showing up or requesting showings through agents, and I don't just mean looky-loos walking into an open house, though we see less of that lately because people get depressed because they walk into a house they can't afford. But in general, if nobody's coming to your home, if you're the seller and no one's requesting, or you're only getting one request every 2 or 3 weeks, it's probably trying to drop the price, because if you're not getting showings, these are the signs, and good agents will explain this to you as you go. But if you are getting showings, then you start to go, where are the offers? If they're having showings but no offers, there's a question then of why are the people not offering? Now, is it something wrong with the property? Is it something wrong with the area? Or is the price just too high for what's going on right now? Every property is different. And this is back to my thing of saying, not macro, it's micro. You got to look at your individual property and your individual area and analyze where everything is there. Another opportunity. Renovation projects, ugly homes, things that are, fixers, especially cosmetic fixers, where you walk in and go, yeah, good bones. Too bad, this is, it's got all this ugly old paint, from 1942. And 1960s wallpaper added to it, and some interesting tile. Well, those homes aren't going to move. Everybody right now is buying the move-in ready stuff. If you can afford to do the fix, if you can put some time and effort and and even sweat equity in, that's where the opportunity is, especially for first-time buyers. If the house is functional but dated, but you can get into a good market, the old rule of get the worst house in a great neighborhood, that can really pay off in the long run. And certainly, that was our thing that we did when we first got married. We bought the ugliest house on the street in a good neighborhood, and made a heck of a lot of money on that house. And over 7 years of owning it. When we moved in, it was it needed a lot of work, but it was fully functional. So those are the things that you may want to look at, and also there's some fix-up loans out there. Fannie Mae has or the FHA, the 203K, I think it is, renovation loan. You can actually get those as well, and stack your loans depending on how you can qualify. Back to that whole mortgage issues, but keep on thinking, because your situation may work. What else do we want to think about? High-end stuff, those $5, $10, $20 million homes. Luxury sellers are a lot of the time a little bit more open to creative financing ideas. Whether that's, some seller financing, some kind of lease to own deal, lease option, some kind of odd delayed closing things. Because they're used, to be able to afford those homes, you've usually done some deal making over the course of your lifetime. There may be some more flexibility there, and also because a lot of those sellers don't necessarily need the cash to move to their next property and buy it. Sometimes they do. Sometimes a deal is a deal is a deal, but sometimes there's a little bit more flexibility in that market. And sometimes if you are trying to figure out how to get in, find out. Maybe someone's open to some creative financing. If maybe that a seller carry back and they'll finance you. It might work out better for them because there's some tax benefits to them to have the money coming in over time. Again, talk to a financial advisor about that and an attorney about that, not me, because I can tell you where and how to buy the property, but I'm not going to I can't make those kind of advisements, not just because it's not legal for me to make those kind of advisements, but more importantly, I'm not the person who's qualified to talk, the intricacies of that. You need a really good attorney if you're going to structure a deal that for seller financing. Both sides need really good attorneys to make sure it's set up in a way that's advantageous for both. We are seeing some of the price gaps are narrowing a little bit in some of the high-end neighborhoods. Asking prices versus sold prices are not getting so crazy as they were, because you were seeing a lot of stuff with a lot of aspirational pricing. And as those, but when we talk about those gaps coming down, a lot of that is because people were still thinking that the pandemic pricing mattered. And so they were asking, aspirational prices, high numbers, thinking, oh, someone's going to give me X for my home that is worth Y. There's just a little bit more realism. It's not that so much that if you really play with the numbers in a lot of areas, it's not so much that the prices have come down the asking prices may have come down, but the actual sales prices, especially in the luxury markets, are not necessarily as crazily down as what people think. They're actually up. Prices are still up across the board. Even in the national numbers, they're still up. They're only up like a point in a lot of areas. But where we are in Southern California, there's kind of a prediction it'll kind of be semi-flat, go up a point or so in Orange County and LA County. But then next year then it could be that 3 points again. Depends on who you're listening to. There's a lot of different economists trying to throw their numbers around, and those of us who read them all kind of go, well, it'd be nice if they agreed on any of this stuff. They don't. But that also could mean that if this is that semi-flat year, well, this is the year to transact, because next year you're going to want to be in your new property that's going to take that level of appreciation. So there's some advantages on that one. International buyers. There's another one. That's really become a harder one to count on. And that's happened over the last few years, especially during the pandemic, because you weren't able to necessarily travel as much. So that slowed the international market. Now, here in Southern California, the international market's always been a big part of the entire real estate zeitgeist. To get to the point where we can have those international buyers come back, that's going to take some time, because while we're in this time of uncertainty, where we don't know what's going to happen with tariffs, we don't know what's happening with immigration, we don't know what the rules are going to be 2 years, 4 years, 5 years from now. So it makes it harder to think in terms of it. But the Los Angeles market is one of the best international markets for investment, because if you compare our prices to London, to Toronto, to Sydney, to Hong Kong, these are the global cities. We're one of those global cities, and I include Orange County into that too. This is a major global luxury market. So if you're looking at luxury buyers and you have a luxury property you want to sell, the international market's still part of it, because there's a lot of money flowing into here from all over the world. But you are not seeing, the large amount of investors out of China coming into Los Angeles that you used to see, 8 years ago. The large numbers of investors coming out of Russia and other former Soviet bloc countries coming into New York that we were seeing a few years back. Because they can't get the money out. If you can't get the money out of wherever it is, you're stuck. But there's plenty of ultra high net worth individuals out there who want to buy property, but also need a place to park money. Because the one thing about real estate compared to everything else is that real estate will always be there, fires notwithstanding. But it's a global safe haven. You can park money in real estate. So you will see the international market continue to be there. You will see the international market grow over time. But there are a lot of people who are holding back because of shifting currency. We don't uncertainty. We don't know where the currency rate will end up. Where will the dollar be in 6 months or a year? There are other capital restrictions and things. So there's opportunity, though. Say you're a buyer, go back to the buyer side, and you want to buy in Bel Air or Holmby Hills or Pasadena or Beverly Hills or Calabasas or Newport Beach. There's more opportunity because there's less competition from those international buyers who were using this as a safe haven. So it plays both ways. So, we've always done, a real estate firm that does a lot of global business and a lot of high net worth individuals. So we tend to see those buyers transacting regularly, but at the same time, there's less. There's not the numbers that there were a few years ago. What else? We're also seeing a lot of trophy houses, those ones you would just go, oh, that's so cool. They're sitting longer. They've always taken a long time. People will go, we were talking before about people are looking going, oh, something's been on the market for 30 days. They're going to be stressed and want to sell. If you have a super high-end listing, it could be a year, it could be 2 years, it could be longer. And that's part of the game. That's why you only see a certain number of people take those deals on, because you've got to be in the position that you can be marketing a property for 2 years, 3 years, if necessary. I was in a $118 million property not that long ago, and that's, it's gone through 3 different agencies in the time we've watched the property. That just happens. And, we won't get into whether or not that's the right price, because it's not my listing, it's not my opinion. Where else does uncertainty bug us? New construction. I tell you, that's probably the ultimate area right now for uncertainty problems. It takes a huge amount of capital to build something. It takes a huge amount of capital to be able to carry the costs of finance of the construction, to hire the labor. Can you get both the property? You can get the property right now, but you can't necessarily get the materials, because you need a certain amount of material, and we've got tariffs going on with Canada, and tariffs going on with Japan, and tariffs going on, certainly with China. It's tricky right now. So when you're trying to plan for these things, what's going to happen? Where will the money be, and can you do it in a timely fashion that the development works? So you're going to see a slowdown. Here in LA, we lost 13,000 homes to the 2 fires, and that the construction labor pool is now down because we have less ability to bring people in from overseas to work on them. Eventually, that'll get worked out. I strongly believe that we will get there, and they'll come up with a way of doing a guest worker program. You have to, because we'll need the labor, especially knowing the Olympics are coming to LA in 3 years. So they're going to need to get things cleaned up and fixed, and you need to hire skilled labor, and we don't have enough of it without having people coming from overseas. But until we do, that's going to be a big challenge for that, and that's across the board. That's not just regular development. The luxury sector that also needs labor. If you want to rebuild a house, you've got to have highly skilled craftspeople to do that. That's you're not going down to Home Depot and getting some guy to come help you to do the fine finishing on a $60 million property. So all of these things are all part of the uncertainty. So things are a little slower. And because we won't be seeing as much development, you're probably going to see more opportunity to get higher values on some of the newer turnkey properties that are ready to move in. There's from a standpoint, if you're a buyer, there's also, you still got to be just as careful, whether it's a high-end property or, just a new tract home. You still got to look and make sure that everything is functioning. You still have to do all the inspections and everything you would have for anything else, but those are all there. Now, one of the things that, for me, I am an avowed mid-century modern geek. I am like the biggest fan of mid-century modern architecture. We're doing another video right now. When that one's done, we'll link it into this one as well, talking about mid-century modern homes. The mid-century modern quality homes in this area will always command a premium. Top quality architecture of any style will command a premium. No, if you've got a Neutra home or you've got a Lautner, you're making money on that one. You're paying a premium for those, and those really aren't affected as much by market volatility. Those are because you'll always have people who want that something special. If you want something more traditional, you get a Wallace Neff or something like that. Your people are going to want to buy that. A Quincy Jones, they're any name architect. You'll see a certain level of demand no matter what. So if you're in one of those homes and you want to sell it, call me. I'd love to do them, especially if it's mid-century modern. I will practically live there showing that house if you need me to. I am that much of a geek about them if they're a great home. Whatever kind of home you're looking for, off-market deals are happening. And this is something that there's some controversy over the way a couple of companies are talking about them. And that's really more the way they're referring to them. There are always off-market deals. If you're in California, and it's different, every state has their own rules. In California, you can sell within your agency. You just can't market outside your agency until you go public with it. And then, but you can have something that is a signed listing that's not promoted yet and it's just within your listing. Those deals are happening. I've done them over the years. There are a lot of reasons why. And I will always say, if you can go to the open market, you're better off generally to get the highest price. But the price is not the only thing that you should be looking at when you're transacting. It's just as valid to be thinking, what are the terms you need? And sometimes those terms are secrecy and non-disclosure agreements. That people have reasons why they don't necessarily want to do it, or sometimes it's just a timing thing, and you want to be able to have a deal in place to be able to go looking for the other one, but you don't want people to know that you're selling your house yet. There's 100 reasons why, but those off-market deals are happening. I know I've got a list over on my desk with I'm going to say 30 homes around LA and Orange County right now that are all off-market deals, and they're there. The ones that are more fixery, those tend to go a little differently. That's they're going to investors, but just normal regular homes, they're there. I'm seeing stuff anywhere between. I think there's a couple of condos I know, and then there's some super high-end stuff in the in the 20 million range. That are just there, and those off-market deals will go, and they will continue to go, and they generally will happen more with for agents and agencies that have strong networks. Like Douglas Elliman, where we are, we have our network, and we can talk to each other. And others have that too. The agency and Compass and those they all of these different groups will have it, but the bigger luxury agencies, we're the largest luxury broker. We have the highest average price point in the country. So we see this stuff. So if you're thinking buying or selling, doesn't matter. There is opportunity in this uncertainty. You got to take advantage of it, because the old rule. One of my favorite old quotes many years ago. I used to use it in marketing for my video production company back in 1995. Was that more people became millionaires in the Great Depression than any previous time in history? Well, that was true, and it kind of still holds today, that the time to take advantage of things is when everybody else is on the sidelines. So take advantage of the uncertainty. Take a look at your own situation. Think about what you really want in life, and don't get locked into the idea that because things are volatile, you don't want to take action. If you want to take action, go ahead and do it. If you want to sell your house because you want to make a change, there's no reason not to do it. If you want to buy a property, yeah, it's a little harder right now because of all of the things that are going on. But at the same time, if you're in a position to buy, and don't buy something you can't afford. If you're in a position to buy what you can afford. If you can afford it now, you can afford it 5 years from now, 10 years from now. The whole idea is, get in the market, because over time, yes, people will say the S&P 500 has outperformed the real estate market. Yeah, but you didn't get the tax write-off by having your money sitting in the S&P 500 for the last 30 years. You're paying for somewhere to live, whether you're paying for the house that you live in and you can you get that tax write-off, or if you rent one place and you buy in another market that's an investment that works better for you, you've got those write-offs. There's depreciation, all those things that come with investor things. But real estate in the long run, is there. Real estate will always be there. So, don't be afraid to make the move if you can afford to do it. Don't make a stupid move. Get some advice from those of us who are, deeply immersed in this at all day and all night, and live and breathe it. And that's what we're here for. We're here to help you. And if you're not in our area, but you need a good solid referral to somebody where you are, I don't just pull a name out of a hat. I'll actually help vet somebody for you and get you a good referral. I'm happy to do that. That's actually a fun kind of thing to do, really, because and I do have connections all over the country in most of the luxury markets. But for if you're looking to buy or sell in the greater Los Angeles or Orange County areas, the rest of the Unvert Group and I are happy to help and do whatever we can do to help you and find you the right place or help you get out of the place you're in. So anyway, see you on the next one.